Hi everyone, welcome back to your channel name. Today, we're diving deep into Horizon Technology Finance Corp., ticker HRZN, a venture debt player in tech and life sciences. Priced at around $6.90, can it soar to $1,000? Spoiler, it's a long shot, but let's break down the pros, cons, margins, debts, dividends, and future outlook. Plus, we'll compare it to major indexes. If you're new, hit that subscribe button, and let's get started. Horizon Technology Finance is a business development company, or BDC, lending to venture-backed startups in high-growth sectors like AI, biotech, healthcare IT, and green energy. Since its 2010 IPO, they've deployed over $3 billion in loans. Their portfolio? 52 loans worth $639 million plus $59 million in equity warrants. A recent merger with Monroe Capital boosts their scale, but the stock's down 38% this year. What's going on? Let's weigh the strengths and weaknesses. Pros. HRZN targets high-growth sectors with massive potential. Think AI and sustainability. Their Monroe partnership expands their lending power. Plus, a juicy 19.8% dividend yield attracts income investors. They're originating $100 million plus in loans each quarter. Cons, their portfolio's risky. 5 loans are non-performing, dragging net asset value to $6.75 per share. Earnings missed estimates. Q2 net investment income was 27 cents, below the 32 cents forecast. As a small cap, liquidity's low, and volatility's high. How profitable is HRZN? Their net investment income margin is 10 to 12%, but it's been shrinking by 2 to 3% yearly due to stressed assets. Compare that to peers. Hercules Capital boasts 15 to 18% margins with steady growth, while TriplePoint Venture Growth sits at 12 to 14%. HRZN lags in profitability, but leads in yield. The Monroe merger could help close the gap, but it's a work in progress. HRZN's debt? About $256 million with a manageable 1.2x leverage ratio. Interest rates at 6 to 7% sting in a high-rate environment. They cover 88% of dividends through operations, so debts are payable, for now. Side income? Warrants and prepayment fees added $68 million in Q1 payoffs, boosting the balance sheet, though these are volatile. Since its $15 IPO in 2010, HRZN's stock price is down over 50%, but dividends push total returns to 50 to 60%. Investors got income, not growth. Looking ahead, analysts see the stock hitting $12 by 2030, $12.50 by 2040, and $16 by 2050, a modest 5 to 7% annual growth. Plans? Expand venture lending in AI and green tech, leveraging Monroe's platform. What could hurt HRZN? Fed rate hikes raise borrowing costs, and a recession could tank startups. Geopolitical supply chain issues are another risk. On the flip side, U.S. venture capital is booming, green energy subsidies are rising, and ESG trends align with HRZN's sustainability focus. These could drive growth. HRZN pays a monthly 11 cents dividend, yielding 19.8%, steady but flat, with only 1.9% growth over 5 years. It's no dividend aristocrat. Returns? HRZN lost 38% this year, while Nasdaq gained 25% and S&P 500 20%. Over 10 years, HRZN's total return is 40% versus Nasdaq's 300% and SP's 200%. It's a yield play, not a growth stock. So, can HRZN hit $1,000? Highly unlikely without a VC miracle. Expect 2x growth in a decade at best. HRZN's great for dividend lovers but risky for growth seekers. What's your take? Drop a comment, like, subscribe, and hit the bell for more stock breakdowns. See you next time.